Hey there, Alice Otto with Simple Option Strategies. Today I'm going to be covering a SPX 0 DTE trade. It's one that I trade every Monday, Wednesday, and Friday. So let's get right in. Okay, I use the ES chart and market to manage these trades just because it has a flow from overnight that I can monitor, check the trend. There's no gaps like the SPX, so I use ES, and it's just a couple points difference from the SPX. So it's really I compute that into the spreads that I use. Okay, so I usually get in very, very early on just because volatility is good and premiums are the highest around that time. No decay has been set, started for the day. And so this particular trade, I got it right at 9:30 and I got a call spread in 29.40, 29.45 for 50 cents, which is a pretty decent premium for that time. And so the second trade I put on, and I did want to get an Iron Condor, a full Iron Condor that day. I got in at 45 cents, and it was a 29.10, 29.05 put spread. And so I got him in right around the same time. Again, just to really collect that premium right at the beginning. And then I waited a little bit, another few minutes before I put on my second position for the call spread. And I like to split these up in two just to make sure that I don't get an immediate reversal or a market coming against me right at the beginning. If I do, I get out pretty quickly for a small loss, and since I have a half position, it's quite a small loss to take, and then I'll just reassess and see where I'm going to be putting positions again after that happens. But in this case, I really didn't get an aggressive move against me. I did get a little bit of move up. But that's okay, nothing to be alarmed at. And so I went ahead and allowed the market to do its thing. I did get a nice move down, so I was already profitable on the call side, which I was very happy about. Market moved up a little bit, kind of gave me a little bit of a security that it wasn't going to go aggressively down. So I did put on the second position of the bull spread, which is a put spread, and I got a little bit better premium on that. Was very happy. So right after that, this is now the time to wait and let theta do its thing. So so the options for 0 DTE decay pretty quickly throughout the day. So the market did go up again, had a reversal from the downside, but right around 11:26, right? The market went down and went back up, and I was able to get out of the put side of the trade for 10 cents. And usually anywhere between 20 and 5 cents is very, very good. So I was happy with 10 cents. And just a note here, when I get my initial fills on my trades, I immediately put in a buy order to close out the trades at 5 cents. And I just have them up there so I can monitor the trade throughout the day and know what premium, if the trade goes against me, how high of a loss I would be taking. I use supporting resistance to make that determination. Not showing that here, but that's another video that I'm going to be putting together. But in any case, I did get out at 10 cents. I was very happy with that. The market did continue to move up, which kind of started to endanger my my call spread. And so as I was monitoring that, looking to see how high the market was going to go, I was ready to close out this trade at a loss if I had to. But the market retraced a little bit. It went ahead and tested the high that it hit and went back down. And so I was pretty comfortable that we had some support here at the resistance here at the top. And as the market continued moving down, I went, let it go throughout the day. I had a buy order at 5 cents for the put spreads, and right around 2 o'clock, actually 2:03, the market took a nice dive down quickly. Had that order in, and boom, I got the order to close the trade at 5 cents. One thing I want you to note here is that you can see here that I got out of this trade right around the same place that I got into it. So that just kind of tells you the decay in these options as they go out. right, as they go out in time. So I got in to these trades at 50 cents. I got out at 5 cents, right around the same area that the market was when I got in. Okay, it's something to note here, and just how much in favor this trade is for you when you're getting decay in these options. Another thing I want to share with you too is that I do close out my trades. I do close out all my trades at the end of the day. I don't keep them open or let them expire. And the reason of that is anytime you have a trade on, obviously the longer you go, the more risk you take on. And so I try to close these out as quickly as I can. And I just want to share with you the what the market did after, but I did collect a I did collect a nice profit, 850 on the call side and 800 on the put side, giving me 1650 for the day, using 10,000 at risk. Okay, so it's quite a good percentage on these zero DTE trades. Was happy with this one particularly. All right, so here's a chart of what happened afterwards. You can see here the call spread. I did get out here. I closed it right around this point, but right after that, the market shot up. And if I was a trader that let my trades expire, I would have been sweating bullets here and probably taking a loss. Okay, and so it just kind of reinforces my rule for taking profit when I have it and getting out of the trade before it expires. Okay, that's all I had for the day. Hopefully you found this video of value, and I'll be making more of these. So stay tuned. All right, thanks. Have a great day.